Hello traders, happy Wednesday and welcome to the How to Trade with Price Only webinar, and hello from cold Canada, cold Toronto, well, nearby Toronto. How are you guys today? Please give me some, okay, you can hear me. Where are you from, guys? I can see, hello Kim, good to see you from Denmark. We have Sweden, we have Yorkshire, UK, Montreal, hello neighbor. Finland, Kenya, Utah, Mexico, or should I say Mexico? Belarus. Hello Belarus. I was born in Belarus. Hello Belarus. Texas, Poland, Netherlands. Perfect. All right. Thank you very much, guys. So, pleasure and honor to be here. Thank you for finding the time and the chance to join. This webinar would be recorded for you, so you can go and rewatch that again if you would like to hear that. I'm very excited, and this is pretty much a new experiment also for me in this structure. This webinar is fully sponsored and organized by FinMarket, and I'm very happy to be here. And before we start, big thanks to FinMarket for making that happen for the community. So we have a mixed community today, my own followers, we have FinMarket students here and followers of their own community, and it's wonderful. So thank you for the chance, thank you for the opportunity, and I'm very excited. I am sure it will be great, and I hope you will enjoy it. That's, as always, my personal goal. So this is a fully free strategy. There is nothing else here. It's not a sales webinar or not any gimmick or trick or anything like that. No, it's a pure webinar and partnership we have with FinMarket. So that's all. It's a strategy that I would like to show you how to trade with price only. So before we start, I do have several requests, guys. You are many. We're almost full today on the capacity, which is amazing. So thank you for that, guys. Once again, for the opportunity. My request, you are many, I'm one. So please, when you ask your questions in the chat, I see the chat on my other screen. Remember, have some patience, okay? And please try to ask the questions accordingly, which means according to the subjects I talked about. Don't try to ask me questions about things that are not related to the webinar and lead me to other places. Please respect that, follow the structure, ask the questions, the relevant questions according to the subjects and the topics, and I will be more than happy to answer. I will stop in between the slides. We'll reply to questions if we have any relevant questions, and at the end we will have a question and answers section, so you can basically ask everything you want there. Okay, so in today's menu, what do we have? A quick about me. I know many of you know me, saw me, heard of me, saw me in YouTube or anywhere else online, and was during all my periods in life when I was younger and when I'm bigger now and older. So a little about me. What did I learn when I was working in the hedge fund house? Why Forex is the best market to trade? Trader most common mistakes, several myths that traders have. How to switch from beginner to pro, step-by-step guide, and charts only trading strategy, of course, explained with examples. Okay, so quickly about me. This is who I am. I'm 35 years old. I'm Vladimir Rybakov, 35 years old. Now look carefully. I'm married plus 17, and this is a joke, of course. It's just 2 kids, 1 cat, and 14 kilograms. It's not all 17 kids. The first time I said the joke was a live seminar. People look at me, really? 35 and you're plus 17? And then I had to add here in the script, it's only 2 kids, 1 cat. All the rest is just kilograms. I'm sure the married people among you are familiar with this feeling. 13 years trading experience and counting. I'm a former dealer in broker house, former hedge fund trader, and I know it might sound like I'm too old, but I'm just 35. Well, maybe, and hopefully there are younger guys here among you. So I'm not so old at the end of the day. And today, in the last several years, I'm a full-time trader, mainly long-term trader. That's the truth, more like swings and invest. And mentor. I have my trading club, and I have my online business and online activities, educational to trading related. And I'm the owner, well, one of the owners, to be fully transparent, of the blog VladimirBekov.com and the academy tradersacademyclub.com. What did I learn in the hedge fund house? Always, that's a question people love to ask me. Vlad, how was it? How was that to work for a hedge fund? Now, here are the several things I learned. The salary is great, by the way. When you know what you are doing, and if you are a profitable trader, you make numbers that it's hard to imagine. Well, and this is true, by the way. I was doing numbers much bigger than I am doing for full-time trading as for myself, because you trade with much bigger numbers. But it has advantages, and this I prefer: earn less but have my freedom style of trading. That's the truth. You have to sacrifice and give up on something in order to reach something else. For me, the freedom and the chance to be able to do whatever I love was much important than any money in the world. I have one note here. The sound dropped. Guys, can you hear me still? Just give me some Y or yes, please. If the sound is okay, maybe it's just temporary. Okay, it's good. All right. Thank you. The big guys know what they are doing. This is a very popular claim. Well, most of the times, they all think they know what they're doing. The reality is it's not correct. It's not true. And the beginners always think, these big guys, they always know. No, they're not. They do know the psychological factors. They do know to set traps based on that. On that, no one can beat them, definitely. In some variations, like options trader or futures, you do see numbers, bigger, growing, increasing, or decreasing numbers of the money flow in positions. That helps you to understand the pressure specific instruments might have. But they are masters of the psychological factors. Panicking crowd and manicking crowd. They know to set traps according to that. I admit a lot of my techniques based on divergences and cycles are coming from these psychological factors. And I'm very thankful I had the chance to learn that when I was working there for a pretty short while, but was enough to make my money and to start my own journey in the retail trading world. Now, here is another claim. Most traders believe that you must have a big capital, big numbers to make profits. Completely wrong. You do not need big numbers to make profits. Of course, it's good to have the deep pockets, but the reality is, no, you don't. There are a lot of sources and ways nowadays to get funded if you prove yourself as a trader. And the last thing I learned there, well, there were a few more, of course, But this is just more like just for a joke. The coffee is awesome. They know to spoil their people. That's the bottom line. They know to spoil their people. It was great to work there. A few notes about traders' most common mistakes. Oh, sorry. I think, yeah, we skip one slide. Sorry, guys. Why Forex is the best market to trade? Well, first of all, and this is a fact, this is the biggest financial market. It doesn't matter how you turn it around. Stocks, options, crypto, whatever you want. Nothing can beat the Forex market for one reason. To make a transaction in any other available market, you first of all need to make an exchange in your money. As simple as that. That makes the currencies market, Forex, right? The currency trading market, being the biggest financial market. And it's growing and growing and growing every single year. Nothing can beat this market. It's 24/5 trading market, which is amazing. It's the safest market in the world in terms of returns on invest. Of course, if you know to control your risk. And the reason it's the safest market in the world is very, very simple and logical. Think about it this way. In stock, how many times you saw stocks flying in tens of hundreds or on percents per day, especially if it's penny stocks or other instruments. Let's even not talking about cryptocurrencies back then in 2017, but it was crazy, simply crazy, right? So the Forex is the safest. The normal movement, I would say average movement of an instrument in Forex is about 0.5% up to 1% per day. Of course, there are some days of high volatility, some changes, political or fundamental changes, which might change this percentage, but the reality is the moves are smaller than any other of the big markets. Now, you don't need to big capital to start. That's a huge advantage. Leverage, it's another huge advantage we have in this market. Of course, that could work in both ways. It's also one of the disadvantages of the market, and I will talk about it a bit later. It's suitable for full-time working people, and it offers a lot of trading tools and trading solutions to its traders. Several mistakes that traders tend to do. First of all, leverage. What is a leverage? In simple definition, borrowing money that doesn't belong to you. If you have $1,000 capital and you trade $10,000 position, you trade with money you don't have. If you borrow the money, it comes with a price. This price is, first of all, bigger swap, bigger spread, bigger commissions in general, all kind of commissions you have to pay, and bigger numbers working to the plus and to the minus, which means leverage or using not your money can help you to increase your account faster, but can also decrease your account even faster than that. And for those who don't know to use it correctly, leverage is a problematic thing. So before you find yourself using big leverage, learn to trade without leverage or with the minimum of it. Okay? Don't put yourself in this place where you would be regretting your actions on daily basis. Start slow, prove you can do it slow, prove you can do it safe. You can always go and make it more aggressive later on. Overtrading is another terrible mistake traders do. Now let's admit it. How many of you here, and answer that with yourself, have this common belief, especially at the beginning of the trading life, trading journey, that the more you trade, the more you can make. Logically, it sounds normal, right? If I trade 10 hours per day or 20 hours per day, I can make more. Now, this is completely wrong. Completely wrong. The chances would be exactly the opposite. The more you trade, the bigger the chances you will make a mistake. Why? Because the market does not care of what you want. It does not care how much time you dedicate to trading. Think about it logically. If you, at the beginning of the day, euro dollar stands for 115, at the end of the day, euro dollar stands still for 115, it doesn't matter if you spend 10 hours or 20 hours this day, if the price doesn't change, especially in the direction you would prefer, you would not be able to make money. So the common belief, the more I trade, the more I make, is totally wrong. And the answer is, the correct thing is, if you sit in front of the computer just forcing things to happen, you will find yourself getting excited by 2 pips move. I saw that many times in my community. Traders basically come and say, "Oh, did you see this pair? Did you see this pair? It's just moved." So I'm looking at the charts, like, it moved 5 pips. Where the excitement comes from? And the excitement comes from this place exactly. The more you see it, the bigger the chances that small move, tiny move, would make it so exciting for you that you would find yourself making a trade. So you will want to avoid that, especially at the beginning of your career. The changing trading tools too frequent. Now, think about it this way. Do you change your car every single week according to different weather conditions? Right? Will you change your car if it's sunny today, and if it's more sunny tomorrow or the next week, or if it's raining now, or if it's snowing now? You drive the same car. Well, some of you maybe allow themselves better cars for different conditions, no problem. But you got my idea. You don't go and change your working tool because the sun is not as it used to be yesterday, right? Same with trading. Market is different. It's alive. Every day is new day. Every week is a new week. Every single month is a new month. Different conditions, different political situations, different geopolitical conditions, and so on and so on. Things go, change, develop, right? If you go and change your tools just because yesterday it worked and today it doesn't work, you would never be able to find the comfort in your trading and the ability to use the right tools at the right market conditions. And that's my tip. Surround yourself with different tips, like different tools, tools to trade trending market, tools to trade on reversal market, tools to trade in a range, tools to trade in high volatility, tools to trade or not to trade in low volatility, and so on. Surround yourself with different tools, and based on the market condition that you face, you would be able to adjust. But don't make these terrible conclusions that traders do. This strategy, yesterday it worked, today it fails. That's not a good strategy. This way it's impossible to become successful and consistent in profit. Revenging on a loss, this is another very serious mistake traders do. And especially if you spend a lot of time in front of your computer. Because when you have a loss, let's admit it, no one loves to lose. But if you reach this moment, it affects you psychologically and makes you the willing to revenge. Basically, you're trading numbers that are bigger than you. As simple as that. You are trading numbers bigger than you. And that makes you wish to revenge on a loss. And you find yourself forcing setups. And you can imagine what will happen from this moment forward, right? Trading without risk management. I saw so many traders entering positions, and if you belong to this community, think about it and try to understand the logic, lack of logic behind this action. Trading without risk management. You enter a position without having a plan how you will get out of the position. Right? Think about it this way. Does that make any sense? Entering a position without having a plan how to get out of a position in a profit or in a loss, especially if it's in a loss. It doesn't make sense, right? Because you will find yourself trading the wish, trading expectation, not a fact. And you would really want to trade facts. Okay? Trading based on rumors, another mistake traders do. Oh, I heard someone say it's going to go up. I heard this guy is going and say it's going down. And you just jump in accordingly, expecting good things to happen. Mistake. Nothing good will happen here. You can get lucky, you can make some profits on the way. It's not going to last, and it's not going to make you a successful trader. Following too many trading gurus. Now, first of all, I hate the word guru. It makes it all sounds to be a bit too fancy. Now, following too many traders or so-called trading gurus basically would cause you a confusion, because everyone has its own style, and these styles are not necessarily rhymed or synchronized or could fit each other. So every single time someone else could say something different, and one time one guru will be correct, the other time the other guru will be correct, and you would always find yourself switching the sides. Oh, now I go with this one. Oh, then I go with this one. Oh, he was right. No, he was right. Oh, you got the point. You can't make it successful this way. Now, dreaming about making money and not focusing on education, it's another very, very, very serious mistakes traders do. They come to market just to make the money, the dream of making money. There is nothing wrong with this dream. We all are here for the same reason. I came for the same reason. But you cannot deny and avoid this. You can't become successful in anything in life without proper education on that very subject. You cannot, and trading is not different. And this is another mistake, refusing to learn. How many times you saw traders, or maybe you had the same mistake of refusing to learn from a mistake? You do this mistake, tomorrow you repeat this mistake, you know it's dangerous, you know you lost because of that once or more, and you keep doing that. Now, Einstein once said, it's pretty silly and ridiculous to expect a different result by keep making the same thing. Right? Now here I want to show you something. To what column do you think you belong? Here or here? 99.9% of traders stand on this line. That's the truth. For someone to tell them when to buy, when to sell, how much to buy, how much to sell. Almost no one cares about that. My dear friends, the recipe for successful in anything in life, not just in trading, starts with this. Understand what you are doing. What is the market? How the market works? What are the forces driving this market, what caused the market to move, and so on. It takes time to properly get educated, to arm yourself with the right tools, with the right arsenal, to be able to deal with all the changing trading conditions. If you refuse to learn the art of trading, how can you expect to make successful trading? Okay, it's very, very important thing, and I want you to remember this picture and change bad habits if you have them. The steps to switch from beginner to a pro trader are these. First of all, define your trading goals. What do you expect from trading? Do you plan trading for a living? Do you plan just to be able to get some extra money to pay the bills or to buy some gifts for your family or for your pets? Whatever you prefer, right? But define your goals. My goals were very simple. Have enough capital to be able to trade for a living. No, I don't have the goals of being a multi-billionaire or anything like that. No, I don't plan to become the next George Soros or any other fancy name. No, my goal was to reach this place where I can trade for a living. I define my living. I know how much I need for my living, for all the comfort of the living I would like for myself and my family. And according to that, I build my goals. When you have a clear goal in front of your eyes, then and only then you can achieve it. Define your trading preferences. Do you prefer to work with manual techniques or some algorithmical strategies? Do you prefer social trading, automatic trading, trade copiers, managed accounts, and so on, signals? Define the trading style that fits you and your personality. And maybe this is something new for you, but we all are different. I have, believe it or not, 70% of the people, according to, when was this poll we took? About a couple of years ago, maybe 1 year ago, poll we took about preferences, and 70% of my club prefer the manual trading. About 20% prefer strategies and systems to work with, and the rest prefer the easy solution. For someone to make the job for them. No problem with that. Just define these preferences so you know exactly what you are looking for. Define your trading availability. Now, are you a working person? How much do you work? When is your free time? How much time can you dedicate to trading, to learn trading, to trade itself, to make conclusions from trading? All that is extremely important. Okay, you have to define that. Again, when you have the definitions, you know what to look for. If you just shoot in the dark, you have no idea where you aim. Find your trading style, and here is the truth. To find your style takes a lot of time and effort. Are you a scalper? Are you an investor? Are you a swing trader? Are you trend trader, reversal trader, indicator trader, price trader, Forex trader, stock trader, mixed trader, and so on? Define yourself. 90% of traders will have no idea who they are, what's their style, what they want to achieve. They don't know to answer these questions. Do you? Ask yourself these questions, guys. You might be surprised by the answer. Surround yourself with supportive community you can learn from. People, like-minded people, that will speak the same language like you, that will be able to understand you. Stop following gurus that promise you 100% per day, week, or months. I call them the Instagram traders. Those that go outside taking pictures with someone else's car, next to someone else's home, next to someone else's jet, yacht, or whatever it is. The complete majority of them are Instagrammers, not traders. And it's important to know that it's impossible to achieve huge numbers without taking huge risks. It is impossible. And if anyone claims something else, it's not true. You have to understand that the market is a zero-sum game. For whatever you plan to earn, someone will have to lose. You cannot print as much money as you would like without being able to take these risks. Remember that. Read books. Fact, period. As simple as that. Read old school books. They are amazing. They are amazing. They dedicate you to focus. They open your mind to amazing things. And books, and webinars, or all the online is not a replacement for a book. It's a great extra, great materials available. But read books. Can I recommend books? Definitely. But please email me at the end. Okay, I'll give you the email at the end of the presentation. I'll be more than happy to give you the several books that I find simply amazing. Have a trading journal. Track, record your positions. Constantly analyze your progress and performance. And here is another thing the traders do. They check only the bad trades because they think, oh, if I lost, I must have made something bad. No, it's not true. Sometimes you do all the right steps and still can lose. No problem with that. It's part of the statistics in trading world. Trading is business of statistics. As simple as that. So analyze the good trades you took and the bad trades you took. Learn from both. And prepare for a long-term journey. Maybe you heard that already, but trading is not 100-meter sprint. It's more like a marathon. Prepare for a long journey. The end of this journey is irreplaceable. There is no replacement for anything like that. And again, define the end of your journey. For me, it was always to reach this place where I can trade for living, for my own needs of living, not by making $1 million per week. No, I never had these dreams. I will never have these dreams. I don't care about these numbers and these dreams. I care about my own style, my own freedom, my family freedom. Define exactly your needs, because only then you know where to aim. Just to make a lot of money is not a goal, it's a wish. Now let's talk about the chart only trading strategy. Now, very important note. I myself love indicators, especially two, MACD and Bollinger Bands. I love it because they are amazing tools for trading from my personal point of view. But for the beginners, I would suggest to learn to trade naked charts, or at least to practice a long time on naked charts. Why? Because when you are dealing with naked charts, all you focus on is the price, how the price changes, what makes the price move in a specific direction. Okay, so when you focus on that and when you learn the chart, the second part, to work with indicators, would be much easier for you. Those who start to rely on indicators from day number one basically ignore the price, ignore the chart. ignore the levels, ignore the movement. Some traders call it price actions, others call, like myself, call it money flow, others call it whatever, a million of possible names. Does it matter? No. We all rely on price and what it represents. And my personal tip is start with the naked chart. You will always be able to add indicators later on, but do not rely on indicators. Indicators do not tell you the full story. They tell you very, very, very narrow story on a specific mathematical calculation algorithm. Each indicator, different mathematics, different formula. Okay, so the naked chart, extremely important. How to choose charts to trade, we will discuss about that, and how to define trends, how to find the swing points. And very important thing I will show you today, the multi-time frame trading advantage. Another important thing we will see now is turning principles and how to trade with naked chart step by step. So let's start. This is a naked chart. Now you can make it any different colors you would like, it doesn't matter. Okay, this is a naked chart, and this is a naked chart as well, no indicators applied. The advantage of that is you can see clear trends. Let me ask you this question. Is that a clear trend upside? Oh yeah. Is that a clear trend here? Oh no. What about this one? And this one? Okay, it's when you just look at the chart, you immediately see the amazing outcome of the price. Where do you have your trends right now? Or do you have trends right now? What about this one? Do you have any trend here? Is there anything clear, clean, possible here to trade? Look, highs going up, lows going down. So that's the advantage when you look at that. When you look at indicators first, each indicator will tell you something different. Some indicator will tell you sell here. The other indicator will tell you buy here because it broke some specific level or whatever it is, right? Each indicator is a specific mathematical condition. Each indicator could be used in specific market conditions. Some for trend trading, some for ranging trading, some for reversal, some for trend continuation. That's why when you learn to identify price, you will be able to understand the very, very basics. And that's what you need to make good decisions. And that's why my tip is, especially for all those who just start the trading journey, give yourself some time. Allow yourself to focus on price only. Naked charts. You will always have enough time to add indicators for some filters or polishing later on. Now, how do we define trend? Uptrend is defined. Don't worry, the screen will just come back. It just I make a whiteboard so I can draw. Uptrend defined when you have lows going up, each following low is higher than the previous one, and when you have yourself highs following the same direction. Each of the highs is higher than the previous one. Downtrend define the opposite. When each of the following highs is lower than the previous high, and each of the following lows is lower than the previous low. Okay, very, very simple definition. So in that place, and when we have at least 3 highs going down, we can say boom, downtrend, and 2 lows, of course, 3 highs and 2 lows. Okay, when you have 3 lows going up and 2 highs going up, anything above it would make it a bullish trend. Simple definition, simple logic, simple trend following. At least 3 points, we would say. Up and down. You get them, you have a definition of a trend. The higher the time frame, the bigger the trend. The lower the time frame, the lower the trend it will basically represent. Okay, so on the weekly disc, or this is the daily chart here, that could be your daily trend. And if you take a look on the 1 hour chart, you would find yourself dealing with this here, with this definition, or this, or this. Okay, each of these legs combining the daily trend would be a trend by itself, minor trend in the on the lower time frame. Okay, so that's the definition of a trend. Can you define a trend here? Now it started pretty beautiful, right? Higher highs, higher lows. It looked pretty nice. At the moment we don't have this following. Are we still bullish here? No. Now it's lower lows. We still had at that point higher highs. Only now we start to change for possible lower highs and no new lower lows yet. So as for now, you are not in trading conditions. So the 4 hour chart would be a bad idea to work with, to trade with. Okay, that's pretty much it. Can you go and trade that on a daily? Maybe, if you have a clear picture there. Can you trade it on the 1 hour chart, this part? Maybe, if you have a clear picture there. But on the 4 hour chart, it's definitely not clear. So don't try to make any conclusions based on that. Multi-time frame trading. The advantage of that, and you can organize whatever the platform you work with, you can organize your MetaTrader to look this way. I believe that other platforms have these possibilities as well. The advantage is you have a clear understanding on what's going on. When you take a look on a daily chart, you are in a bullish trend. When you take a look on the 4 hour chart, you are in a bullish trend. 1 hour chart, bullish trend. 15 minutes could be in a corrective trend. Why? Because here, look what you have. 3 lower highs, 3 lower lows. Oh, that there is a good chance we are in a short-term correction now. So when you work, don't worry, we'll discuss about it a lot in a few minutes, but that's how the view of the multi-time frame helps you to get clearer picture. And you know that according to the long term, I want to look for buys. So if I would be able to go here for some correction, and from here to start rising up again, I would be looking for my buys opportunities. Okay, makes sense, guys? So when you have this picture in front of your eyes, it always helps you to remember what are your trading opportunities. Are they belong to the short term, to scalping, to medium term, or to the long term? Where are your opportunities coming from? If you see your any kind of setup on the 15 minutes, you know it belongs to the short term. Now, why do I show you that? Because many traders think that if they will find something on the 15 minutes, they would be able to enjoy the whole move here, if this move will happen. That's a mistake. You cannot ever make conclusions from the lowest time frame to the biggest time frame. Impossible. Okay, you cannot make a conclusion that if at the beginning of February there was a rain, then the whole February would be raining months. You can't. You know that specific day would be raining, maybe 2 days, maybe a week, never the whole month, never the whole period. You got my point? You got my metaphor? Same here. From 15 minutes, How can you make any conclusion for the long term? No, you can't. Okay, that's very, very important. So when you find your opportunity on specific time frame, especially if it's a lower time frame, remember that belongs to the lower time frame, and you have to manage your positions accordingly on that time frames. Does that make sense, guys? Okay, it's a very, very important thing which many traders tend to forget when in a trade. And we all dream about the big fat fish, right? We all dream about go to 15 minutes, find an entry, and make 1,000 pips profit from the daily chart. Well, it's a good dream. Maybe if we get lucky, it will happen once in a while, once in a lifetime, or once per year. But we cannot make it as a strategy. We cannot make it as a trading routine. Okay? So that's the advantage of the multi-time frames trading. Any questions so far? Please, only about subjects I covered, please. If you have anything, please write it down so I can see it in the chat and reply. All right, if you have, please write down, guys. I will stop again later and will reply, of course. So now I want to discuss about turning principles. There are several. I want to discuss about two main ones, which I apply and use in my trading. And Lynette, that's a great question. How do I identify reversals? That's the subject right now. Okay. So how do we define a possible reversal? And I say possible because nothing is absolute. Nowhere in life, and especially not in trading. So there is a bigger probability or a lower probability, but never an absolute thing. Turning principles are like this. This is the first one I have. A move in a specific direction, in that case down, low that was created, pull back, retrace down to try and create new low, and a failed attempt. We call that false break, FB, not like Facebook, false break. Okay, it was trying to break the previous low, failed to do so, and retraced up again. Closed above the broken level. Okay, that's true, Barbara. Some call it market strap, some call it the other way around. It doesn't matter. What matters is what it represents. The logic here is a failed attempt to create a breakout, to create a new low. In that case, failed attempt to create a new high. What does that represent? Very likely the bulls are not so powerful here. If they failed to create new high and price retrace down again, maybe the bulls are not so powerful. Maybe the bears will take the control from this point. Okay, so the first turning principle is a false breakout, a trap, a fake breakout, call it whatever you prefer. It doesn't matter. What does matter is what it represents. And at the moment we go again below this low, basically there is a good chance, no warranty, but there is a good chance that the price would continue to follow. And here, if we break above this high again, there is a good chance the price will continue to follow. How do we increase our chance to be correct, to trade in the bigger direction? What do I mean? Now think about it. This is a fake break to the downside, returning all the way to the upside. So if that comes in a bigger trend to the upside, and you have such a breakout, there is a great chance, greater chance for that to continue higher. Now, if your bigger picture is bullish and the trend following upside, and then you got correction which stopped and retraced upside, there is a good chance or better chance for that to go higher. Okay? Same here. If the trend was before that to the downside, then you get some pullback and a failed attempt to create a new high. We break again below that, there is a good chance or increased chance for a continuation. Okay? Now I do want to answer some questions which we have here. Ahmed, do I know range of different pairs? Not sure what you mean, but yes, of course, every different pair has some different characteristics. Yeah. Barbara, as I always said, please keep the questions according to the subjects. Okay. If you have anything else to ask, please email me. No problem. Okay. Michael, well, all the rest of the things you know, Michael, would be helpful. I'm not here to teach all the possible things. I'm here to explain the very simple principle of price movements. Okay, all the things, all the knowledge you have, you can apply to that, of course. Okay, that's a good question, Chris. Can you be consistently profitable only trading ABCD patterns like that, for example, right? That could be called ABCD as well, if you would like. As I said before, I don't think it's smart to use only one thing in a market which is built by complex of many things. Market has millions of different conditions, changing conditions. If you're not able to adjust, well, it makes it much harder, because if the market is not in corrective phase, what will you do? You would stay completely without all the opportunities, right? So if several opportunities by ABCD for months or for year are enough for you, then yes, you can make a living. But you got my point, right? How do I define a trend? We spoke about it before. Here, that's the definition of a trend. I explained it before. 3 lower highs, lower lows, or higher highs, higher lows. Ahmed, there is no such thing, sure thing or sure turnaround or 100% turnaround. It does not exist. My tip, stop looking for that. There is such thing in trading called increased chances, better odds, better statistical, you name it. But it's impossible to get 100% success with any technical pattern. It's impossible, because again, market conditions change. What might look ready today might not look ready for tomorrow, and you have to be able to adjust. So here is an example of the false breakout. Chris, you are very welcome, my friend. A false breakout. We have a bullish trend before, pullback, right? An attempt to create a new low here, small new low here, right? And at the moment we go and break in a bigger trend, our chances, that's not a guarantee, our chances to ride on the bigger trend would always be increased. And considering the risk versus the reward plan would provide you good opportunities with increased chances to be correct. Okay, Okpan, that's a good question. Is it advisable to close a trade once you notice a minimal downtrend in the opposite direction? The answer for that is lying in the multi-time frame trading. What my personal belief is, first of all, define what trend are you trading. If you trade with the daily trend and the 15 minutes show your reversal, you should not be care of that. But if you trade a 1 hour chart, for example, trend, and the 15 minutes show signs against you, maybe it's better to cash out, wait for the retrace, and look for the new opportunities. Yes. Okay, it's always related. What are you trading? If, let's say, if I'm investing in something, okay, in a silver, for example, from the end of previous year, just for example, yeah, and now it's pulling back just a bit, should I close my position? Of course not. Think about it this way: the more you intervene in the market, the more time you will have to spend in front of the computer to find the next opportunity. This is the simple formula. The more you intervene, the more you try to manage, the more you try to make it sensitive, the more time you will have to sit there. And if you get out of a trade, how will you spot the perfect opportunity to rejoin a trade? You will find yourself always running around looking for the best opportunity to rejoin. Very good chances you will miss the next chance. So define your trend you are riding, and according to that, manage your trades or trends. Okay, Lynette, where would be, well, as I said before, after a false breakout in a trend, once the previous high is breaking, that's your place to start looking for possible buy setups and start to value, is the risk versus the possible reward you have worth it or not. And again, that would be, we will see the step by step in a few minutes. Okay. All right. So that's the first turning principle. The next turning principle is the definition, the pure definition of the trend. Remember what we spoke before, guys? 3 highs in a row, 3 lows in a row defines what? Possible bullish trend. It could be short-term trend like this and then continue lower. But on the time frame it happens, it gives you the understanding that there is a good chance for some trend in that direction. And the bearish trend is defined by 3 lower highs and lower lows. Now what you see in this image is basically 2 highs and 2 lows and a vertical line, horizontal line. Why do I say vertical? If this line been broken, then what happens is this becomes to be called a high, and you have now a new floating low. That's already giving you 3 lower highs, 3 lower lows. And that already gives you the understanding that there is a good chance that now you would see some kind of bearish trend here. Will that change the possible longer term trade? Of course not. Because for the long term trade to change, the long term will have to create you the turnaround. Right? And that's what we call corrections. If that's what will happen here, that could be just a very nice correction of something bigger happening on the higher time frame. So if blue represents 1 hour chart, the red could represent daily chart, for example. Does that make sense, guys? That's the flow of the things. That's how it works. Okay? Now for uptrend, we have the same. Low, high, low, high. And I draw 2 here to give you the understanding. Once we break above that, there is a good chance we would get exposed to something like that. Will that change the possible bigger trend? Not necessarily. It might be like that. So the red could represent just a correction. Let's say it happens on the 15 minutes. Does that mean it will change my 4 hour chart trend? No. It could just lead for some kind of correction, for some kind of bullish trend on the 15 minutes time frame. Okay, and it's very, very important to understand that and to remember that, because many traders forget about it, as I said before, and try to make conclusions from 15 minutes to a daily chart. Not so smart, right? Not so smart. If you open at 6 a.m. your doors and there is a rain, it doesn't mean the whole day is going to be raining. You got the point. So let's move on. That's the turning principles. And here they are live. Look what happens. This was a bullish trend. How do I know it was a bullish trend? Several highs going up, several lows going up. That was a bullish trend. At that moment, they changed. Lower highs, lower lows. So there is a good chance I would be exposed to some kind of correction. Will that necessarily change my bigger trend? Of course not. Maybe it's going to move like that. Why would I rush to make any conclusion here? You see that, guys? Do you understand what I'm saying here? Right? That might belong to bigger time frame as well. Can I make conclusion from here? Of course not. Of course not. Right? I have to make conclusions based on what I get, the facts I get on the time frames I work. That's the flow of the decisions we have to make. Now, Alan, this is a great question. How do you determine the profit target? Next major support resistance. Now, that's why I said before to Michael, all the knowledge you have would help you. Support resistances from higher time frames would definitely be suitable to set as targets or your destinations, right? Ideal destinations, definitely. Trend lines would help you. If you have knowledge in channels or Fibonacci, everything, all the knowledge you have, use it. Use it. But as long as my personal definitions, as long as the higher time frames support you in the direction you choose to trade, you have a chance to ride it and ride it well. As long as the higher time frames did not give you any opposite signs by changing, like false breaks we saw before, or lower highs, lower lows, right? As long as the higher time frames are with you, you get a chance to ride a trend because the higher time frame trend did not change. Okay? Now that's a good question. Keep repeating here. What's the best time frame to define these things? Higher highs, higher lows, and so on. There is no such thing better time frame. No such thing. There is a very important thing in technical analysis in general. The higher the time frames, the more reliable the points and the moves are, because they are exposed to less noise. Simple. Okay, let's move on, guys. And here is a little guide I would like to share with you. But before that, any questions about, please, about what we just covered until now? Let's see. There was a question, Ahmed. What if in bullish trend around the second high is the next that will create the third high goes lower than the second low? No problem. No problem. Because let me go back here. That's what you are asking, right? What will happen if, let's say, in this downtrend, it will go above than this high, right? Nothing. As long as you are basically below this, and that's your structure, you can assume there is a chance for this kind of trend. That's pretty much it. And every time the definition will be different. Sometimes it will be like that, and sometimes it will be like that. The corrections also would vary. Okay. Well, Ken, that's a good question. What about looking 2 time frames higher to see the trend is with you? Yes, that's what I love to do. 1 and 2 higher time frames. You know me for a while, you know that this is my style. If I trade 4-hour chart, I love to make sure daily and weekly are with me. They're supporting my direction, my assumption. As long as they are with me, I basically have not much to worry about. Of course, I have my risk management plan, right? But as long as the bigger forces are with me, why would I worry about anything? Okay, good. So here we are, guys, step by step. What do we do? So I marked this vertical line to show you where the trend started to be bullish. So we have higher highs and a bigger picture, yeah, and higher lows. Boom. Once we broke this high, we are in the definition of a bullish trend. Now that happened on 7th of December. That's why I marked it so you can see basically how it looks like on the real time on the lower time frames. Okay, that was my goal here, to explain you how it looks like. So from this moment we are bullish. That means if there will be pullbacks, and how we will define the pullbacks: lower highs, lower lows, right? Simple. The same definitions we used before. From that moment, we will be looking for what? For, after we got the retrace, for a rally. Now that happened, the retrace happened on the 4-hour chart, and I can go to lower time frame, which is the 1-hour chart in that case, and just spot the reversals again, the change of the trend. Remember, we have two principles. One, false breakout. Oh, sorry for the ugly drawing. Let me just redo it, please. Boom, boom, right? Fake breakout, and then continuation upside. Or the turnaround. Higher highs, higher lows. Highs, highs, highs. High, high, boom. 3 lower highs, 3 lower lows. I know that as long as this low is holding, there is a good chance I'm continuing further. What will happen if this low will be broken? Then it might change my picture here. Maybe it's going for deeper correction on the 4-hour chart, right? But this low holds me the 4-hour chart correction, the 1-hour chart retrace from, and that's why it's so important. We call that invalidation level, right? It's very important because your plan, your picture is valid as long as a level holds. Make sense, guys? Okay, so this is what we have here. Now again, please note, I am not showing here any indicator. All the indicators you would have in that case would help you to make specific decisions at specific time based on specific market conditions. But I want you to understand the logics, first of all, of the price. Why it is like that, why it's so important to be able to read the price? Because in the moment you have 3 highs going in the same directions, 3 lows going in the same directions, you have increasing money flow in that direction, in that instrument. And there is a good chance that as long as this will hold, you would see the trend continuing. Increased chance. Will that be a warranty? Of course not. But it would be very, very high chances to see that going. Now, so how do we actually enter? Can we enter with the breakout after the second high and protect this low? The answer is yes. Can we enter here, wait for some kind of retrace to any Fibonacci level and then trade? The answer is yes. Can we wait for some kind of retrace and bullish candle appearances? The answer is yes. What you have here is, as long as this holds, you should value the possible entry you have and the possible target you have. So for example, if this is the place where I want to start looking to enter, right? I need to ask, okay, That was my previous high. If it's a bullish trend, I do expect the price to reach this level again, right? Or as long as it holds, for example. Now this is the level. So if I enter with the breakout, will I get my chances to earn something here next to this target? No, I don't, right? So I have to value the other thing. So I'm checking, okay, did the 4-hour chart give me any reversal signs? Do I have lower highs, lower lows? Do I have any false breaks and lower lows? Breakout. If the answer is no, I can continue with the trend. Until when? Until I will start to see these principles of reversals. Okay, that's the things you have to value with yourself. Ask yourself these questions. What is the trend you want to follow? Don't forget that the daily just turned bullish here. So there is a good chance we are here for a long time buys. So you have to remember that, right? And if you trade here, you ask yourself, what is the length of the trend you are going to work with? The daily? In that case, the daily resistance is only here. So you have yourself a huge chance here. Or are you going to trade with the 4-hour? Right? Based on the definition of the trends you follow, and I said based on the definition because each of you here is different. I love the swing trading. I love a daily and the weekly. Someone else loves the 4-hour and the 1-hour. No problem with that. But you have to define it for yourself. Not every trader is able to hold for a few weeks. Not every trader is able even to hold for 1-2 days. So you have to be very fair with yourself. Okay? Make sense, guys? Okay. Robert, can you not use Fibonacci level before the pullback and exit? Yes, you can. You can do all the knowledge you have, apply that in this. I show you the principles of trends. Okay, flow of the price. All the knowledge you have here, apply. It will increase your chances because you will be able to trade in the flow of the things. Now, if you want to squeeze and maximize your performance, then okay, you define here higher highs, higher lows, wait for the next retrace to happen. Happened from here, right? That's the 15 minutes. And as long as this low holds, start looking for the same bullish trend. Highs, highs, high, high, breakout. Right? You got 2 highs, 1, 2, 1, 2. You got 2 lows, 1, 2. Now, why do we require the third? Because if third high, I mean high is 3 here, yeah, the breakout. Why do we require that? Because before it happened, we never know if this is not just a correction, A, B, C, D, for a breakout and continuation lower. We never know that. 2 highs and 2 lows are definition of a correction. 3, definition of a trend. Yeah, 1, 2, 3 breakout. Oh, yeah. There are many ways to name that, right? Okay. So that's the squeeze, even lower, right? From daily to 4-hour to 1-hour, and then to 15 minutes. Okay. And again, all the definition is what is your entry versus your possible reward. And your possible reward would be from the definition of what is the trend you follow. Tip: never go with a trade that from the beginning, from the initial moment of the entry, does not offer you at least 1 to 2 to your desired target. Because the market conditions might change during this period of trade. So if you don't have at least 1 to 2 from the initial entry to the possible desired target you define, don't even bother yourself. Look to improve it. Okay? Very important tip. Next one, pound CAD. Started very ugly here, but then look what happens. Here, and breakout. From this moment, we are in a definition, ugly, yes, but in a definition of bullish trend. So as long as this low will hold, theoretically, we can look for pullbacks and buys. If this low will be broken, game over, because then we don't have the flow of the trend. So we go to lower time frame, and we start here. You see the date, 24th of December. 24th of December. Of course, don't trade it by the end of the year, right? just example. And you wait for the retrace at that moment after you verified your trend. You got a retrace, and you're looking for the first time where you would be able to get yourself the turnarounds. Right? That's all the way down to here. 27. From this moment, you again have the question here. So what do I trade? Am I trading the 4-hour chart trend? Am I trading the daily chart trend? What am I trading? Right? What is my destination? What is my definition? What are my next important levels? And again, use your knowledge you have here. Support, resistances, trend lines, channels. Use that. It's important because they all represent levels. Okay, and again, define your trend. So we got the correction here, 27th of December, and we start looking for the possible entry. Now note that this is only two lower highs, lower lows. So this, as long as this holds, does not give me the chance to go and trade sells on the 1-hour chart, right? So I can't. It's only possible retrace for continuation. It will allow me to trade the buys. Go to lower time frame from 27 December and start looking for the same structure. I got the structure, and here comes the question. Can I attack here a buy as long as this low holds? Where will be my target? Will that be based on the previous daily chart? Will that be this resistance or this resistance? Or will that be 4-hour chart trend line destination? Right? You define it, and then you know to value your risk and your possible reward. If it's less than 1 to 2 from the initial entry, skip it. New Zealand dollar. Now I want to show you the Fallsburg principle. Look, at that moment, 3 highs, high, high, and new high, low, 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 and so on. Before it was a bearish trend, now it turns bullish trend. So theoretically, as long as this low holds, we are in a bullish trend, right? As long as we don't have the reversals. So from this moment, I can look for retraces and buy. Now here is the 4-hour chart. I got my pullbacks. In that case, 1, 2, 3. So theoretically, we might be able to see deeper correction here as well, as long as this top holds. But if this top will be broken, then this correction would not be relevant anymore because we continue with the daily trend. So as long as my daily trend, holds my higher lows and higher highs, I'm bullish. I'm waiting for the retrace, and I am looking for the first place where I can be able to define a reversal principle. We have two reversals principle, as we saw before, higher highs, higher lows, or fake breakout and turn to the main trend. In that case, I got a Fallsburg right here. Sorry for the ugly drawing. Here, this Fallsburg. If we break this high, theoretically, I continue with the daily trend. Why? Because the daily trend holds the structure for me of higher highs, higher lows. It does not change. So yes, I got my pullback. Now I got a false break here in the direction of the daily time frame. Can I trade it? If the risk reward fits in, the answer is 100% yes. What you risk versus what is your reward based on the definition of the trends you follow. If it gives you at least 1 to 2, boom, you have yourself a good chance. Okay, and very good question. So this was also a false break. So why won't I trade here? Because we never got any breakout above this level. From here, we continue to new low. That's why, right? This was the false break, the fake breakout. We never broke this high. We just recreated the new low. And therefore, this becomes my breakout. Okay? Or, of course, we can go to lower and start defining a rising trend again. And if we would be able to do so, few highs going up, then we would be able to trade with the trend definitions. So you have the false breaks, which are very powerful in the direction of the higher time frames. We have the definition of the trends, which is higher highs, higher lows, or lower highs, lower lows. Alan, re-entering a trade. If I trade, say, 1 hour chart time frame, I cannot be there all the time on the exact entry point. Should I use limit orders to enter? You can, definitely. As long as the levels you define are respected. Because if they are invalidated, then the plan of this specific setup becomes irrelevant, right? Okay. Bree, that's a good question. If the daily did not give you a clear direction, would you go and trade weekly or monthly? I could, yes. Or alternatively, 4-hour chart trend. Work with the trends that are clear, with the time frames that are clear, with the instruments that are clear. Okay. Michael, double top, double bottom also are very respected patterns to work with, of course. Okay. Ahmed, that's a good question. What are the Fibonacci for retracements we can expect, like after trend develops pullbacks? Yes, between 38 to 61.8. That's pretty much the ranges, the most common ranges. Yes. Yes. So, any more questions here about this technical part, guys? Once again, look how the flow goes from the time frames. If you can define it clearly, you can trade it clearly. If you find yourself in the middle of hard times and things become not clear, you find yourself doubting, questioning, hesitating, then it's simply not clear. Ignore it. Move on. There are so many instruments to trade. Why would you stick to something that you can't clearly define? Make sense? This is a very serious mistake traders do. They find themselves forcing because they were hunting for a trade, they were waiting for a trade, things become unclear and they still wait. Why? Because I believe it's going down, or I heard somewhere it's going down. Why? Trade facts. Nothing, no guru, no Instagram guru would ever be able to tell you better things than the chart. Trust me on that. Many people call me guru and I hate it. I'm not a guru. I am just a trader. I just operate in the market like you are. Maybe a bit better, but it doesn't matter. I am exactly like you. I'm not a guru. I'm a trader. I just listen what the market tells me. As simple as that. I don't care if George Soros is buying or selling. I don't care if Bill Gates is buying or selling. I care what the chart tells me. I trade facts. You better do the same. No guru will tell you the story better than the chart itself. Trust me on that, guys. A few important notes which I want to share with you. You can combine any 3 time frames or even 4 time frames. Just remember, the more time frames involved, the more complicated a bit it becomes. The combination could be any. I prefer weekly, daily, and 4 hour. Many other traders prefer daily, 4 hour, and 1 hour. Others 4 hour, 1 hour, and 15 minutes. That's okay. All based on your style and personality and preferences. Define and work with clean instruments and time frames. If you find yourself fighting to define, ignore this instrument. Avoid uncertainty. Work with small risk, big reward principle. It always, always, always is important thing. Unfortunately, most traders work the opposite way. Unknown risk, because they enter without any idea without any idea of stop loss or exit plan, and they just say it will be fine. It won't be fine. Maybe it will be fine one or few times. It's enough to have one time to erase everything. Don't do that. Wait for your setup. Don't create one. There is always a reason to enter a trade. Always. Too easy. Oh, there is support. Oh, there is a candle pattern. Oh, there is a trend line. Oh, Fibonacci. Oh, channel. Oh, some forum. Always a reason. Million of reasons. Wait for your setup. Don't create it just because you heard or saw or believe. Okay? Don't try to revenge the market loss. There is always tomorrow when it comes to markets. There is always next opportunity, and it will be right across the corner. And if you will focus on revenge, you would miss this opportunity. And very important thing to remember, not every day you will find tons of opportunities. Have your patience. There are days that are untradeable. There are weeks that are untradeable. You cannot force the market to do what you want it to do. If you try, you would regret. Track record your performance to find out your strong and weak points, your strengths and your weakness. Track record yourself. Learn yourself. What are the best time frames for you? What are the best instruments for you? What are you trading better, buying or selling? Are you trading better on daily or weekly or 4 hour? Are you trading better on US session or London session or Asian session? Are you trading better when your football club win or lose? Are you trading better when you have good energies, good mood, or bad mood? Learn yourself, and I mean it. Learn yourself. When do you perform best? It maybe sounds funny, but it's crucial. No one can learn yourself better than you. And you should never try to become someone else or trade as someone else, because you are not someone else. You are you. Work to be the best version you can be of yourself, not someone else. Okay, it's very, very important, and do not undervalue this. We all are so busy, we all are so overloaded with missions and responsibility in our lives, and that makes us become lazy for such important things. Track record, guys. Track record. All the professional traders track record themselves. That's how I learned so many principles about myself. Don't be lazy. Find these 10, 15, 20 minutes, as much as required, but do it. Okay, Ellen, do I trade Elliott waves? No, I'm not an Elliott wave fan. It's extremely powerful, but I never managed to make it successful. I trade cycles based on divergences, or combined with divergence and convergences principles. No. Okay. So, guys, as I said before, this webinar was available thanks to FinMarket. I hope you enjoyed it. I certainly did. I will work to upload the video and will send it to you. So please follow up your email. As a special agreement with them, and I emailed also my followers. You are aware of that. As a special agreement with FinMarket, my personal trading systems, including the access to the annual membership to the club, and including the Divergence University trading course, all together are available for free for all the new accounts to be open. So if you open a new account with FinMarket and deposit, fund your account, you can get any of these two. The special agreement we have with them. And once again, thanks to FinMarket for making it happen. To complete the step, this is the link to follow: VladimirRybakov.com, FinMarket, /line bonuses. Derek, I don't know if they accept US residents. I'm doubtful, to be honest. I don't know. Please check it directly with them. Okay. So this is the link, guys. The PDF would be available in the link, yes, of the video. Okay. It would be YouTube video with the link in the description and the comments for the PDF. So you can find it there. Okay. That's all, guys. Once again, thank you very much for making it happen. I hope you got the value you expected to. I enjoyed. I hope you did the same. It was important to me to show you this approach. I really important tip from me: give yourself a fair time and chance to work with prices. You will always have enough time to work with indicators. Remember, indicators are good for specific market conditions. MACD can work for specific conditions. The Bollinger Bands for specific market conditions. RSI and stochastic for totally different one. Moving averages for totally different ones. So you will be able to use the indicators later on. But understand the principle. Get the flow. Get the what's clear, what's not clear in the market. You would be able to filter the instruments to work with and the conditions to work with. So that's my biggest tip for you from here. So thank you very much for coming, for joining. I wish you a wonderful evening. And if you have any question, please, guys, don't hesitate. My guys and myself will be more than happy to answer you here. support@vladimirrybakov.com. Happy evening and wonderful weekend to come in a few days. Thank you very much for being here. See you soon. Bye for now.